What the heck is going on with Gamestop stock? What is going on, guys? Welcome into this video today. I have been asked this question by so many different people, so many of my friends, so many people that I'm like, you know what? I put the video I'm working on for this week aside. I'm moving up the Saturday upload to Friday, and I'm getting it rolling, and I'm making this Gamestop video. I'm gonna do it, and we're gonna get into it right now. Obviously, this has been one of the most epic stock rallies we have ever seen, like, of all time. Like, this is completely unprecedented. I never thought I would see anything like this. I've never seen anything like this. We might not see anything like this ever again. We're gonna get into everything that happened with GameStop, why GameStop is running. We're gonna get into why it went down today. We're gonna get into what Robinhood did today, what I would do if I own this stock and I'm getting into this. All these different things we're gonna get into in this video. This is gonna be a monster. This is gonna be a beast video, guys. So first, make sure you're doing your own due diligence, your own research, because I'm just a random guy on the internet. Don't do something just because, don't buy this, don't sell this just because that's what I'm doing. Don't do something just because I'm doing it. But if you do get some value out of this and you do enjoy this video and you did learn something, make sure you hit that thumbs up button. That really does help me out in a massive, massive way. Also, if you want to see more videos like this, personal finance, stock news, stock analysis, all those things in between, make sure you subscribe to the channel because we're going to have more content coming out like this. And I'm fired up, guys, so let's get right into it. So the almighty GameStop stock, the holy grail at this point in the stock market, the go-to, the easy money stock, whatever you want to call it, that's what we've got here. This is a stock that was in the $3 range under a year ago. $3, that is unbelievable. Now it's trading at over 200 at the time we filmed this. I believe it closed today in the 190 range, but it did go over 200 in after hours trading. So what the heck is going on with this exactly? You're seeing these ridiculous headlines like, some guy puts $50,000 into GameStop and he turned it into $47 million in profits. Unreal. And that's not even like retirement money we're talking about here. This is like generational wealth. Like if he just puts that money in an index fund and just holds it and gets that, like, you know, very simple 8% return, this guy's making like probably, I can't do the math off the top of my head, but probably 3 to 4 million annually in returns just putting money in an index fund. That is completely unprecedented. That is insane. And, you know, probably 4 or 5 months ago, he just had that 50,000. Absolutely, absolutely unreal. I can't even believe I just said that. So basically, we are in one of the most epic short squeezes that's really ever been seen ever. We're gonna get into detail about all what that means and everything, but first we're gonna just talk about basically how this can happen, what shorting a stock is. So when you go long in a stock, right, and we're gonna have a simple version that's gonna be really, really, really simple, just get the gist of it. Then we're gonna have a little bit more of a complex version. So when you short a stock, you're betting against that stock. You wanna see that stock go down. When you go long in a stock, like with what I do, when I talk about stocks that I'm buying, I go long on a stock. I want to see that stock price go up. Shorting, you want to see it go down, okay? That's two distinct differences, very important. So when you, let's say you short a stock at $100, we'll say you're shorting ABC stock at $100. That stock goes down to $80, you make $20. That's your profit. You want to see it go down, okay? That's good if you're shorting a stock. Now say instead that stock goes from $100 to $120. That's bad. You're losing money. And it's very different from going long. We're going to get into that and why this is very dangerous in a second. But when that goes from $100 to $120, you need to put more money in order to cover so you can keep your position. You can't just keep, you have to put more money in. That's very important. Now, that's the simple thing. Basically, just betting against the stock. When it goes down, that's good. Goes up, that's bad. How it actually works, okay? This is how shorting a stock actually works. So when you're shorting a stock, you're actually borrowing shares, okay? So we've got person A, person B, person C, and we're working with ABC stock here. So person A owns ABC stock. He owns them at $100. Person B wants to short ABC stock. So person B is borrowing those shares from person A, okay? After that, person B has the option to do whatever he wants with those shares. So he's gonna sell them to person C, okay? That's very important. Now, whatever happens with these stocks, it's gonna depend on how much money person B makes or loses, all right? So say that stock goes to $80. Then person B can take the shares back, buy them back at a cheaper price from person C, okay? So he gave them to person C at $100, okay? He's buying them back for $80. That's what he wants to do. That's gonna make him money, okay? Then he can return them to person A for the same exact price and he'll make a $20 profit. On the other end, say the stock goes to $120. At some point, he's gonna have to get out of it. Say it goes to 120, he's like, that's it, we're done, we're getting out. He buys them back at a more expensive price. He returns those shares to person A and he loses $20 and he has to pay $20 to cover. Now, Me personally, you might be thinking, well, why wouldn't you do a little bit more shorting? I will never, well, I won't say never, but there's going to be a very strong chance I never ever short a stock. It's very, very dangerous to short a stock in my opinion, and here's really why. So say you buy a stock at $100, right? You buy ABC stock at $100. You go long on it, so you want to see that price go up. What's the worst thing that could happen to that stock price? It goes to zero, right? That stock goes from 100 to zero. The company goes BK, done, kill it, done. But say in a situation like we can take GameStop for example, say you're shorting that stock at $10, $50, $70. GameStop just keeps going up, 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 up. So you're putting more and more money into it and just keeps squeezing. It just keeps going higher and higher and higher. You have to put more money into it. And it's very possible that that stock never comes down. Tesla's another example. All those people on Wall Street that were shorting Tesla, that were so bearish on Tesla, 6, 7, 8 months ago, they lost a lot of money on Tesla. Tesla put them out of business, a lot of those funds. They lost a ton of money, guys. And then back to the point about a short squeeze, when a lot of shorts have to cover and a lot have to get out, that's when the stock price jumps because not as many shorts are bringing the stock price down. Therefore, we see a squeeze, a really big jump in price, and there we have GameStop. That's the simple version of it. It's a lot more complex, but I know my audience is a lot of newer investors, so we're gonna keep it as simple as we possibly can. And if you look at this here, GameStop was the most shorted stock in 2020, which means it's not super surprising we saw some sort of squeeze. But this, guys, this is completely different. This is something completely different. A lot of people thought this stock was gonna go bankrupt. So basically, what the heck is going on with this stock? Why does it keep going up and up and up? Well, in my opinion, there's 3 different reasons this stock is really rising. The first reason that I really see this stock rising and why this has turned into more of a meme stock is because it's a combination of like people that put money in this stock as a spec play, YOLO money, a turnaround. We're going to discuss what, well, I'm sure you know what YOLO money is, but we're going to talk about what a spec play and a turnaround play is. So a spec play is not essentially YOLO money, but it's money you're completely okay with losing. You're like, all right, I could lose this money and it's really not gonna bother me at all. Spec plays are usually something you keep like 2% of your portfolio. Like Jumia, like that stock I made a video about not too long ago, that was a good spec play. Like if I was gonna put any money in Jumia, which I'm not for a lot of reasons, I'd put like 2 or 3% in there. I'd be like, all right, if I lose it, forget it. Usually, like I just said, it's stocks that have a ton of upside, but also come with a ton of risk at the end of the day. So GameStop could be one of them because it did have a ton of upside. Maybe people looked at it because of all the PS5, all that stuff coming out, gaming's coming back, gaming is really growing, stuff like that. But it's also like GameStop could also go bankrupt if they can't get through this. So, but if they do get through it, there is some upside on the other side. That's something you look into in a spec play, something with a lot of upside, but also a ton of risk, as I just said a few times. Secondly, a turnaround play. So a turnaround play is basically like a beaten down stock that Wall Street like casts off. Maybe something happened in the short term. Maybe they had bad earnings. Something happened with the stock. Maybe the CEO left. Something happened with the company in the short term that really isn't going to affect it too bad over the long term. I guess the CEO is a bad example there because the CEO can't affect a company long term, but bad earnings is a good example because all Wall Street really focuses on is the next quarter, like what's in front of them. They don't look 3 to 5 years out. So that's why you have a big advantage over Wall Street when you look at it that way. But it's a stock that will bounce back. An example of this, a turnaround play that I own, is WBA. It's a beaten down stock. Wall Street's completely written off. They don't see anything going right with it. I really think that's going to be an $8 stock. Maybe I'll be right, maybe I'll be wrong. We'll see what happens. But anyway, I digress. But WBA was a stock I looked at, and I really thought, I'm like, is it more likely that this stock goes from $40 to $20? Or $40 to $80. I really think that's going to be an $80 stock very soon. We'll have to see what happens. Make sure you do your own research. Make sure you look into yourself. I really think this could be an $80 stock, and I think it will be an $80 stock. Wouldn't be surprised if it was by the end of 2021, but anyway, I digress. But these are very hard types of plays to make if you're a new investor. And why is that? First of all, when you're a newer investor, you probably shouldn't be focusing on spec plays because you're just getting in the market. And if you do get lucky with the spec play, like say you just put money in, I don't know, any stock at all that's like a penny stock, and it goes up from like 5 cents to $1 per se, and you make that much money, you're gonna be like, wow, I can do this all the time. I'm about to go full-time investing. And it's really not gonna push you in that right mindset, and it's just gonna be really hard for you, and you're probably gonna lose a lot of money over the long term rather than just focusing on more value plays like stocks like Walmart, Visa, getting more familiar with the market and just dipping your toes in the market and getting a really well-rounded foundation. Turnaround plays, those might be even harder. Maybe, maybe not, but the problem with turnaround plays, the issue you see with them is like if you find a turnaround play, you're basically saying, I believe I'm right and Wall Street is wrong. And that can be hard for a new investor, because that's why I do all these like article breakdown videos, because I can show you that I have the confidence to go against the analyst and say, you are wrong. This is what I think. This is what the facts say, and this is the vision I have. But the thing is, when you're a newer investor, it can be hard, because a lot of the times you're not going to be able to block out all the noise. You might have an opinion, and you might be very well right, and this has happened to me before, and this is why I recommend to focus on more value stocks and not like turnaround players or spec players when you first get into the market, because you might just turn on CNBC and you might be like, oh my God, I really just can't listen to it. Like, you might have Jim Cramer talking about a stock, he has no idea what he's talking about, and it might just give you a headache, and you might just not be able to take it. You're getting the notification from CNBC on your phone. Oh, but this analyst downgraded, this analyst downgraded, that analyst downgraded, and it might just be overwhelming, and you might just panic sell and get out of it. So I really recommend focusing on value stocks when you first get into the market. But this is the first reason why the GameStop is really climbing as of late. The second reason this stock is really jumping so much is mainly because of Wall Street Bets. It's really that simple. People have seen this, and I think people at Wall Street Bets, they're actually, I think they might fall into that first category. I think they saw the optimism around PS5. I think they viewed this as a little bit more of a turnaround. But obviously, a lot of people out there, especially in this day and age that are new to the market, they don't want to know, what this company's projected to go revenues next year. They don't want to know what the CEO's like. They want to know what's the next meme stock, what's the next hot stock, what can I get into to make a quick buck. And I'm sure a lot of people are like that, and a lot of people follow Wall Street Bets. So Wall Street Bets has the ability to move stocks that have smaller market caps. Obviously, they're not going to go move like something like a JP Morgan or something like that, but can they move like GameStop, which has like a couple $100 million in market cap, or it was a couple $100 million in market cap? Yes, they absolutely can. So that definitely had something to do with it. And then people started to get into it. People started to get FOMO when it started to run. More people got into it. Elon Musk came out and tweeted GameStonk just completely out of the blue, and this stock was off and running. Now, there's also some concerns about the SEC. We're going to get into that in a little bit later. I don't think the SEC can really do too much with it. We're going to discuss my whole thesis behind that in a couple of minutes here. But first, let's move on to the third reason this stock is running. And the third reason, I think this is the main reason this stock has just turned into a complete meme, is running ridiculously, is because everyone wants to flush out all of the hedge funds. So hedge funds really like beating down stocks, and they like to short them and basically put them out of business, more or less, because they just do. And hedge funds don't really care about finding that next great stock for their clients. They honestly just care about retaining those clients with high net worth. They'd rather have someone with like a $10 billion net worth than someone with a $1 million net worth, because they can just collect more fees and it's going to make them more money at the end of the day. That's what they want. And that would be one thing if they really were working all the time and looking for that next hot stock, looking for that next play, looking for that next Tesla per se, for lack of a better phrase. But the thing is, a lot of hedge fund managers, they'd rather spend time playing golf with their clients for 5 hours a day. They don't want to spend time reading 10Ks or 10Qs. That's why a lot of people don't like hedge funds, and that's why you have a huge advantage over hedge funds. You might be watching this video saying, well, it's impossible to find this stock before Wall Street finds it, or it's impossible to find this stock before hedge fund managers find it. It's absolutely possible. A lot of people do it all the time. I do it. You can do it too. Anyway, and basically, these just aren't great people. A lot of people aren't a fan of them. Think of it as someone that out there, I know you know this person out there that thinks they know everything. They have every trick in the book. They know, A, B, C, D. They know everything. They can't do anything wrong. But in all reality, they really have no idea what they're talking about. That's kind of what hedge funds are, for lack of a better phrase. And now I'll be completely honest here. Even after all of this, I really thought, especially recently, about throwing like $1,000 in this stock and just seeing what happens. Because maybe this thing will go to 1,000 and I'll like 6x my money. Or maybe it'll go to like $10 and I'll just like sell out of the position. Whatever happens, happens. And I didn't do that. And here's why. It's because there's really no risk reward here. Like, could I see this going to 1,000 over the next month? Absolutely. I definitely could. Could I see this going to $10 within the next week? Absolutely, I absolutely could. I literally have no idea where this stock is going to go. I don't think anyone really has any idea where this stock's going to go. And now there's talk about the SEC getting involved. That's another thing. And I really don't think that's going to happen. And I find it very hard to believe that would happen, because what are they going to say? It's like a freedom of speech type thing, Wall Street Bets is just coming out and like pumping it up. They're not buying into it. Maybe it was a pump and dump scheme like you saw at Wolf of Wall Street, that'd be very different. But from what it seems like, they're not doing that. They're just coming out and talking about it. It's freedom of speech. It's an amendment. There's really nothing you can do. Then there's on top of that, there's also the Elon Musk tweet, the GameStop. Same exact thing. Obviously, if Elon bought GameStop, then went ahead and tweeted that and then sold out and made a quick profit, that's illegal. That's a different story, and then the SEC can get involved. But as of just off of that, just by a couple of like freedom of speech type things, no, there's really nothing the SEC can do. And if they are gonna get involved, they have to have such a slam dunk case that it's like no one can even debate it. Trust me, like no one can debate it. Because what happens if the SEC gets involved and then they don't have a case and they shut it down anyway? They shut down trading and they suspend trading for a couple of weeks. What do you think all these people are gonna do? They're gonna like riot. Like, I mean legitimately riot. Some of the money that these people have made, like that guy that made 50 million, and there's plenty of other people that have profited, both huge gains and small gains. They're gonna riot. Like, this could, pay off student loans, this can pay off your mortgage, this can get you out of debt. You do a YOLO gamble and it changed your life forever. This isn't like, just well, for you, like your retirement, this is like generational wealth. Like your great grandkids are like set up forever, some people. It's completely ridiculous. So it just seems like it's almost impossible for the SEC to get involved. And that's gonna make a lot of people upset if they do get involved. And I'm not talking like average Joes like you and me that are just watching this. I'm talking like Elon Musk, Jeff Bezos. Those are the people that are gonna come out and start having an opinion on it. And it's not gonna end well. It's just not. So I find it very, very hard to believe that they're getting involved. And if they do get involved, it almost seems a little like fishy without this like really slam dunk case. It just seems like, why are you getting involved? What is the reason you're getting involved? So I might think there might be something going on behind the scenes, which I'm just not going to go into details about, but there could be something going on behind the scenes if the SEC were to get involved without that really, really slam dunk case that I just mentioned. So is it likely the SEC gets involved? Honestly, in my opinion, it's not likely, but it is possible. Keep that in mind. It's possible they get involved. So if I own this stock today, what am I doing with my shares? What is my plan going forward? And that's very simple. I would sell out 75% of my shares. So if I owned 100 shares, I'd sell out 75 of them. And I would just ride the other 25%, and whatever happens, happens. Goes to 1,000, perfect. I take my beefy profit. Goes to $5, I already cashed out a nice beefy profit. But now you might be saying, well, Josh, what happens if it goes to 1,000? Then you're missing out on so much potential gain. Yeah, but what if it goes to 5? Then you're also taking a lot of risk. Like, now ask yourself this, are you being too greedy in a situation like that? Are you being too greedy? This is a stock that has run probably a lot more than a lot of people thought it was gonna run. I don't think anyone really knows how much more it's gonna run. If you're making 50,000, 100,000, 50 million per se, are you being too greedy in a stock like this? Think about it. That's just, like I mentioned before, that's just not like wealth for your retirement. That's like generational wealth. That could pay for like your kids, my kids' lives. Not just like, a little bit of their lives. I'm talking like from the time they were born to the time they died, like lives. So imagine if you kept all that money in GameStop and it rides and then it crashes and you lose all that and it slips right through your fingers. Is the risk worth the reward? That's what you have to ask yourself. In my opinion, if I was in that situation, the risk would not be worth the reward, because you watching this channel, would $50,000 change your life? Would $100,000 change your life? Would $10,000 change your life? Ask yourself that. Don't be too greedy, because one day this might come back to reality. Who knows? That could be tomorrow, could be not Saturday, the market's closed, could be Monday. Don't get too greedy. Don't. That's my one piece of advice. Obviously, make your own decisions. Don't just do what I tell you to do, because I'm a random guy talking on the internet. But you gotta make your own decisions and you gotta do what's best for you. Now, other people were asking me, how come you don't get in it now? And it's very simple. I invest in companies I believe in the long term. That's the bottom line. Do I believe in GameStop long term? I actually don't. I hope it does. I mean, I've been going to GameStop since I was a kid. Like, I'm really, really young. So I really hope it comes out of this, and I hope something revives the company. PS5 takes off for the company or something. I don't know. But personally, I just believe in companies that are going to grow over the long term, that have projected double-digit revenue growth, and I just don't know if GameStop's one of them, to be honest. I don't know where this stock's going to be in like 6 months, and like I mentioned before, I have no concept of the risk versus reward in this situation. Absolutely none. Like I said, this stock go to $1,000, I wouldn't be surprised. This go back to $30, I wouldn't be surprised. I really have no idea. Now, initially, this was going to be the end of the video, but then today, being Thursday, so you're watching this on Friday, Thursday, this came out. Robinhood restricts trading in GameStop, other names involved in frenzy. Now keep in mind there were also other brokerages that did this, but Robinhood was the first one that came out and did it. Free stock trading pioneer Robinhood and Interactive Brokers took steps to curb the wild trading activity in heavily shorted names like GameStop. In some cases, investors would only be able to sell their positions and not open new ones. The brokers also raised margin requirements for certain securities. Retail brokerage restricted trading on Thursday in GameStop and other stocks caught in a frenzy that has captivated Wall Street and caused big losses for hedge funds. Free stock trading pioneer Robinhood and Interactive Brokers said that in some cases investors would be able to sell only positions and not open new ones. Both brokerages raised margin requirements on certain securities. Robinhood told clients in a blog post that it would close out some positions automatically if the client was at risk of not having the necessary collateral. The Milan Park, California base said it plans to allow limited buys of securities on Friday. Limited on Friday. Like they were shut down on Thursday. Limited on Friday. I would be irate if I had a Robinhood account. I don't use Robinhood because I think Robinhood has so many different problems. I would be completely irate. This just even adds to this unprecedented story. It literally does not make sense. I personally do not believe Robinhood should be doing this. I think this is a very bad business move. We're going to talk about that in a second, but let me finish the article first. After the announcement, shares of GameStop initially reversed their gains, sliding quickly into negative territory. The stock, which traded above $500 at one point in pre-market trading, closed down 44% on Thursday. In addition to GameStop, the wild trading affected other heavily shorted stocks, including AMC, BlackBerry, and Koss. So really, they're just shutting down the securities for everything that Wall Street Bets is pumping up. Completely insane that this is actually happening. We continuously monitor the markets and make changes where necessary. In light of recent volatility, we are restricting transactions for certain securities to positions closing only, including AAL, AMC, BB, BBBY, CTRM, XTPR, GME, Koss, NAKD, NOK, SNDL, TR, and TRVG. We also raised margin requirements for certain securities, Robinhood said in a statement. Raising margin requirements increases how much money an investor using leverage and derivatives must have in their brokerage account after a stock purchase. As a brokerage firm, we have many financial requirements, including SEC net capital obligations and clearinghouse deposits. Some of these requirements fluctuate based on the volatility in the markets and can be substantial in the current environment. These requirements exist to protect investors and the markets, Robinhood said in a blog post. BS, complete BS. Interactive Brokers said, as the midday yesterday, Interactive Brokers put AMC, BB, EXPR, GME, and Koss option trading into liquidation only due to the extraordinary volatility in the markets. In addition, long stock positions will require 100% margin and short stock positions will require 300% margin until further notice. We do not believe this situation will subside until the exchanges and regulators halt or put certain symbols into liquidation only. We will continue to monitor market conditions and may add or remove symbols as may be warranted. Interactive Brokers chairman Thomas Petterfree, I suck at pronouncing names, Thomas Petterfree, told CNBC Thursday the broker's decision was to protect the market and the clearinghouse. The body responsible for the trusted transfer of the securities and funds between the buyer and seller, Robinhood, however, has its own clearing system. We are concerned about the ability of the markets and the clearing systems through the onslaught of orders to continue to provide liquidity. And we are concerned about the financial visibility of intermediates and the clearinghouses, Perfy said. Shares of GameStop ballooned nearly 200% this week and nearly 930% this year, thanks to emboldened retail investors in Reddit chat rooms trying to stick it to Wall Street pros. This is Wall Street Bets he's referring to. The rookies are piling into names heavily shorted by hedge funds, squeezing the stocks higher as the institution rush to cover their losses. Shares of ANC Entertainment are up nearly 150% this week. The steps by Robinhood and Interactive Brokers taken Thursday were more drastic than what brokers did earlier in the week. TD Ameritrade and Charles Schwab raised margin requirements on Wednesday. Robinhood customers took to Twitter to express their outrage surrounding the decision. Robinhood has made a name for itself through its mission to democratize investing for everyone. The Silicon Valley startup with more than 13 million users pioneered free trading, forcing the entire brokerage industry to drop commissions in late 2019. Either Robinhood allows people to trade freely in the market or they will lose millions of users to the moon, GME, AMC, NAKD, one Twitter user wrote. Robinhood canceled stock orders on GME, AMC, NOK, etc., there should be a class action lawsuit. I thought we had a free market, so Wall Street is okay with me losing hundreds of dollars so that rich investors can't be called out on their risks. Wall Street best, another user said. Adam Finance told CNBC that 10.96% of its clients on Robinhood traded GameStop on Monday when the durations took off. The research firm said 11% of interactive broker clients trade GameStop. Pushback against Wall Street. The Reddit crew is banding together to rally certain stocks in what some say is a pushback against the Wall Street establishment. Hedge fund Melvin Capital closed out its short position in GameStop on Tuesday after taking huge losses as a target of the army of retail investors. Citadel and Point72 have infused close to $3 billion into Gabe Plotkin's hedge fund to shore up its finances. This is a big problem of the e-brokers' own making, as they are so beholden to their payment for order flow overlords. Shows the real fragility of the zero commissions business model, said Timothy Welsh, founder and CEO of wealth management consulting firm Nexus Strategy. Taking payments from order flow from Wall Street firms is a controversial but legal practice done by most electronic brokers. For Robinhood, it's the biggest revenue source. There was some speculation about brokers receiving pressure from the other entities to halt trading in certain stocks. Citadel Securities has not instructed or otherwise caused any brokers firm to stop, suspend, or limit trading or otherwise refuse to do business. Citadel Securities remains focused on the continuously providing liquidity to our clients across all market conditions, the company told CNBC. Petterfy also confirmed there was no compulsion from market makers. The high-frequency traders and hedge funds that could predictably trade against the dumb money from Robinhood traders and pay Robinhood for that information are now realizing that the order flow they are buying is no longer predictable or safe for them. In fact, it now includes thermonuclear bombs in the form of GameStop and AMC, Welsh said. Rep, again, I really can't pronounce names, Alexandria Osco-Cortez weighed in on Twitter calling Robinhood's new parameters unacceptable. We now need to know about Robinhood's app's decision to block retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit, she tweeted. Republican Senator Ted Cruz tweeted fully agree in response to Ocasio-Cortez. Amid Twitter threats about a class action lawsuit against Robinhood, law firm Chapman Albin LLC announced Thursday it is investigating claims on behalf of Robinhood users that were affected and suffered losses as a result of investing in GameStop or AMC through the Robinhood brokerage platform. This is a problem. This is a very big problem. Guys, I can't even begin to tell you how big of a problem this is. There's so much that's going to go wrong with it. So first of all, Robinhood, like we already mentioned, they already had its problems because the app kept crashing, the platform kept crashing. That's a big problem in its own. And this is completely off the top of my head. I don't have any of this planned at all. I'm just giving you my issues off the top of my head. On top of that, what good reason do you have to halt trading? What good reason? There's literally no good reason while all these hedge fund managers can do exactly what they want, as they mentioned in the article. This is what I'm talking about. This smells a little fishy. I don't know exactly what's going to go on, but I don't know exactly how this is going to play out. I don't know exactly how this is going to end. Robinhood's supposed to IPO in the near future. I'm not exactly sure when off the top of my head. Don't be surprised if that stock, when it goes public, is one of the most heavily shorted stocks we've ever seen. I mean, ever. Like, don't be surprised because tons of people lost money on that today. Tons. So what does this mean for GameStop stock? Well, honestly, I don't know exactly what's going to happen. I wouldn't expect a huge movement upwards tomorrow. When trading does open again, I honestly would not be surprised to see this stock come back with a vengeance. I wouldn't be surprised to see more people going into it, not just to do what they're doing to the hedge funds, but to go against Robinhood. I really would not be surprised if that happened at all. But hey, that's the beautiful thing about the stock market. We'll just have to wait and see, and we'll know before you know it. Anyway, guys, in saying that, that is the end of this video. Thank you so much for watching. I really appreciate it. Hopefully, you guys got some value out of me sharing my 2 cents on this, kind of covering the Robinhood side of it and all those different things. If you did, please drop a like on the video. That really does help me out massively, and I appreciate every single one of you that dropped a like on the video. Also, if you haven't subscribed to the channel yet, feel free to do that and turn on that notification bell so you don't miss any future uploads. Let me know down in the comments what you think of GameStop, if you bought it, what the gains you got were, what you think of the whole Robinhood situation, those other brokers that shut down trading for GameStop and those other securities. And I will see you guys in the next video.